I've been trading the markets for the last 8.5 years, going to 9 years, and I've been profitable the last 5 when I went full-time trading, and I've been able to stay profitable. And in today's video, I am going to be sharing the 3 price action concepts that have allowed me to do so. I'm a firm believer that trading can be simple. There is some hard work involved. There's actually lots of hard work, but the concept of being a profitable trader, if you follow the right steps, can be simple. And in this video, I am going to be breaking down the concepts, and each concept will act not just as a technical thing that you have to focus on as a trader, but also a way of thinking that will allow you to put the information that you learn, from your courses, from the YouTube videos in the right category, and allow you to make decisions effectively with this information. I believe that if you can follow these 3 concepts as a trader and focus on this solely, there is no way that you cannot be profitable. So ladies and gentlemen, without further ado, let's waste no time. Let's jump right into it. So as we dive into the 3 main price action concepts that have made me a profitable trader and allows me to stay profitable, it may not be what you think or what you were expecting from a price action standpoint, but it is actually going to be better. Because a common problem that I find in aspiring traders is not a lack of knowledge from the technical standpoint. Common problem that I find is a lot of them need to unlearn what they have learned, right, and relearn, or maybe just disregard some concepts. But the most common thing that I find is actually being able to put the puzzles that you have learned, the pieces of the puzzle that you have learned. You may have bought someone's course, you may have watched a YouTube video, you may have worked with a mentor, and they give you a lot of information and say, well, you should go trade with that and make money with that. But it doesn't always work like that. You have to be able to utilize this information in its correct manner and put it in its correct category for it to be effective. Which brings us to the first concept, price action concept, that I'm going to be sharing today, and that is analyze. This is the process of you coming into the market and analyzing the market. And a lot of the concepts that you learn can actually apply underneath this analyze concept, right? Let's say you come into the market, we're taking a look at gold on the daily time frame. The very first thing automatically is you want to start off on a higher time frame, whether it's a weekly time frame or a daily time frame. The higher the time frame, the more perspective you get, right? So let's say we're starting off on the daily time frame here. We're using multiple time frame analysis. That's what is happening. And you can also use something like market structure. You can also use support and resistance. You can also use the concept of buyers and sellers. Based on what we see here with gold, we can see that buyers are currently dominating because price is making higher highs and higher lows. So from a market structure standpoint, you can see that we are in a buyer's market. And as a result of that, buyers are targeting the high. And we also have a new high that was formed here, and you can still see the minor market structure that was established here and also here. If we scale down to the 4-hour time frame, you're going to gain a larger perspective of what is going on in price. And what we see is essentially that we're able to gain a large read of that, right? So the analysis process involves you using different things to gain an understanding of what is happening in the market. That's the very first concept, right? That is the very first thing. As we scale down to the 1-hour time frame, you're simply just trying to understand where you should place yourself for that particular day or that particular week that you're coming into the market. And right now, based on what we see, it doesn't take an Einstein to tell you that you should look to be a buyer, because when sellers come to the market, they get faded out very quickly. We are in a bullish market, right? So off the top of your head, based on the analysis process, you have identified that yes, we are in a buyer's market, and you continue to scale down over to your time frame, time frame that you're going to be taking your trade. And personally for me, if I'm trading gold, I will scale down to the 15-minute time frame, the 5-minute time frame, and maybe even the 1-minute time frame. Right now, what we're seeing is, same thing. Price is essentially doing this thing. We can scale down to the 5-minute time frame and just gain a smaller perspective from there. Second concept is anticipate. It is the process of you waiting patiently for the market to do what you have analyzed. The analyze process involves you trying to understand who is in control. Where is price going to be reaching for? We have this high here. We also have new highs right here as well that buyers can potentially target, since we are in a buyer's market. If sellers want to come to the market, we know that sellers will target this low, but the higher time frame says, right now buyers are in control. So that's what we're focused on. The anticipation process involves you coming into the market at the right time. But before we do that, let's just say, okay, gain a larger understanding on this time frame. And what we see here is that previously sellers were making lower lows, lower highs, low lows, and lower highs, and until we hit this point, we saw a break of structure and price essentially made a higher high. And right now we're seeing price essentially do its thing again, right? So this gives you a perspective of, okay, are we going into a buyer's market or are we going into a seller's market? So as you start to talk about the anticipation concept, that involves two main things. The very first one is time and price. Coming into the market at the right time when it's going to be moving. If you're trading a pair like gold, you want to be coming into the market during the New York session or during the London session, because that is when price is going to be moving. You can't anticipate a move at like 5 p.m. Eastern when the market is closed. There is no point. So it is best to start to anticipate price to start to do things when it's time to do things. Anticipation process is you waiting patiently, but also coming into the market at the right time of day. I live in the Eastern time zone, so I come into the New York session. Right? If you live in the London session, right, you will come into the market, and I believe this is where we saw the move. This was 2 a.m. Eastern, which would be about 7 a.m. London time, and we saw gold prices move about 169 pep, which is a pretty good move. But now, as we come into the New York session, what we're seeing here is, prices essentially, in a bearish decline. Overall, that's the anticipation concept, right? You coming into the market at the right time. So the next part of the anticipation concept is what I call the left side and the right side. When you scale down to the lower time frame, the left side essentially represents the higher time frame perspective. So let's say from a market structure standpoint, you see price doing this, right? Let's say price is making higher highs and higher lows, higher highs and higher lows. You know that buyers are in control of the market, so you want to be a buyer. This is the historical data that you have seen. And then all of a sudden, okay, you're getting price essentially have a bearish decline. A lot of traders will now look at this as, okay, because maybe if you scale down to the 5-minute time frame, you will commonly see this. So it looks like, wow, well, sellers are actually dominating, so maybe I should be a seller. But the left side will give you an understanding of what is happening over X period of time. The right side is going to tell you what is currently happening right now. And a lot of traders aren't able to wait patiently for the right side to match the left side. And I'm going to show you exactly what I mean here, because that's how you can essentially time the market and get involved in the highest probability trade because of the anticipation process. So we've just analyzed the market from a high time frame perspective, and we know that we are in a strong bullish market. We came over to the 5-minute time frame, and what we have seen here is that the left side is essentially bullish, right? Buyers are in control of the market. Right now, we've seen price essentially break this market structure high. So overall, what we are anticipating is price continuing its move to the upside, because price was making low lows and lower highs, and all of a sudden we get a break of structure right here. And right now, the right side, which would be this side, is not matching our overall perspective because price is in a bearish decline. So this is where a lot of traders get faded out, and you come to the market and you're like, okay, well, what do I do now? Should I be a seller or should I be a buyer? This is your anticipation process. And this is usually the time where I come into the market and I am watching, I'm observing, I leave price to do what it wants to do for at least the first half. I come to the market at 7:30 Eastern time, AM. But what we're seeing right now is, right now, this is about 7 o'clock AM. Right now, I think this would be, okay, so 7:15. We got a couple more candles, I believe. right here, 7:30. So this is when I'm coming into the market and I am starting to anticipate. Maybe I'm doing my analyze process right now. I'm analyzing the market, and this is where I come into the market and I start to anticipate, what I have seen on the higher time frame. So as we go over here, we're being patient. We're just observing, because what we want is for the left side, right, to match the right side. But right now, the right side, it's doing its own thing. It's essentially making lower lows and lower highs. You want to pay attention to both sides. A lot of traders have a tendency to pay attention to just this side, right? And then they get in right here and they don't understand why the market is not going in your favor. But if you want to get in the least difficult trade, or a trade that continues to go in your favor based on momentum, you have to factor in the left and the right side. And what we see here is that we know that price is making lower lows and lower highs, which means that there's a good chance that sellers can continue to dominate. But let's go and we see, okay, beautiful, the market is essentially okay. Well, now we're starting to see a change, right? Price is now, instead of coming out and taking out this low, the market is now essentially changing its overall direction. Let's see. Okay, beautiful. So what this tells us right here, what this little information gives us right now, is that the market was essentially making lower lows and lower highs. And all of a sudden now, we're seeing a new low form. And now we're seeing price make higher low rather than lower low. So this tells us that there has been a change, and this is now starting to look like the left side of the chart, because the left side, we anticipated more buyers to come to the market. We have a break of structure right here, and now we can likely anticipate that more buyers are going to come into the market. So it's all starting to make sense now, because we went through the anticipation process and we waited. This is where we get into our third concept, which is the execution concept. This is where your strategy comes into play. Your strategy doesn't come into play until the last minute, right? You've waited, you've analyzed, you've anticipated, and now your strategy comes into play. What are you going to execute with? Personally, for me, I like to execute with market structure. And right here, what we've seen is we have a break of structure with this particular trade. I will enter based off a market structure break, or based on accumulation and distribution. Those are my main concept. But right there, what we see is that, and I'm going to set my stop loss just about 35 pep on gold, in anticipation that the market is going to keep moving higher, right? And that's simply what it is, because if buyers are coming into the market and price is making higher highs and higher lows, this is the sign that we're likely going to be reaching for more highs. So let's say we have this high right here, price can likely reach for that. So we have this high right there, we have this high right there, and overall, we have this trade, and right now the trade essentially is a 1, that's 2.5, almost a 1 to 3 in terms of risk to reward. So right there, what we see is price essentially trades up, pulls back down, okay, trades down, a little bit of drawdown, boom, and then market takes off. But the first sign that we saw was we anticipated more buyers to come to the market, right? For the switch to happen from, price making lower lows, lower highs, to now the change in the overall structure. And now what we've seen is, price essentially gave us 50, almost 60 pep on this trade. You could have taken something off the table, moved your stop loss to break even, or just simply wait for price to hit your overall target. And that was, 91 pep worth of target. So within a few minutes, you essentially got your objective just by following the rules, right? This is the process. Everything that you're going to learn in trading, guys, is going to follow these three main concepts. There's no other way to say it. So a lot of traders may be very versed in the analysis process, but because you're also not aware of the anticipation process, right, which is showing up at the market at the right time when you can actually get the right opportunity, anticipating, paying attention to the right side, right, and the left side as well, and not just paying attention to one side, right, or paying attention to this side and saying, hey, I'm going to sell. If you understand that the left side tells you the historical data, what has already happened and what can likely happen, and right now using that to anticipate, okay, if we are in the seller's market right now, it means that it is in my best interest to wait for more buyers to come to the market, and this is where your strategy kicks in afterward. In order for me to be profitable, these were the concepts that allowed me to do that: analyze, anticipate, and execute. If you can follow these three main concepts, ladies and gentlemen, you will see wonders in your trading, right? And in order for any profitable trader that you know, any profitable trader that is out there killing it, this is the process that they follow, whether they can essentially, whether they know or they don't. Sometimes some traders are profitable and they don't know how, or they don't know why. Lots of people are out there like that. But if they know, they have an understanding, or even if they analyze your overall results, they're going to tell you this is it. Right? This is how it works. So, ladies and gentlemen, you might have to watch this video a couple of times. If you have any questions, feel free to leave it down below in the comments. But take it to the charts and don't just take my word for it. Understand that a lot of the things that you learn, you need to put them into categories. If you're not putting them into the right categories, you're not going to be able to use them effectively. Going through the process of just acquiring knowledge from different people, different YouTube channels, different mentors is not going to be your savior. It is kind of like you being a king or a leader of a country. You're going to have advisors, right? And each advisor will bring something different to the table. Maybe you have advisors for war, right? And maybe support and resistance, supply and demand, multiple time frame analysis. It all fits into the analyze process, right? That's how you analyze. Same thing with your advisors, right? They will fit, they are good at particular certain things. And then you will have other advisors that will help you. Okay, how do you manage the people? How do you deal with the people? How do you make sure that they obey you, they listen to you, right? That's what each concept you learn will be better in different categories. So we have the analyze concept, which can fit in most of the technical aspects that you learn: trends, market structure, supply and demand, support and resistance, multiple time frame analysis. Buyers and seller concept can go into the analyze because it allows you to understand who is in control of the market, what is price doing, right? And where is price reaching for. The anticipation process involves you now coming into the market at a particular time of day, right? Making sure you're anticipating the right move. It's like you being a sniper and you just positioning yourself at the highest probability time, right? So you can take your shot and, flee the scene, right? That's it. And then paying attention to the left side and the right side, because a lot of the time when you're anticipating a move, you're waiting patiently for the right opportunity. And right here is that window of anticipating, right? And then you have the left side, and then you're waiting for the right side to match, because you come into the market and you see that, hey, this is not what you anticipated on the daily time frame or on the higher time frame. That's okay. This is the anticipation process. And now when you start to see market making high highs, higher lows, that's when you can get involved in the execution concept. So ladies and gentlemen, this is the video. Hope you found it insightful. Hope it is helpful for you, no doubt about that. But as always, it's Manny from LiveFree. Thank you guys for watching. Till next time, peace.